Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, January 14th, 2025, and I will probably just cover the first couple of hours or so and speed it up as we get later in the day. We can look at the daily chart first as we go into this day. Here's the information we have. A couple of legs down for the bears, nested leg 2, leg 1, pullback, leg 2, and here, leg 1, pause, leg 2. We're also breaking below a low. If this is a spike pullback channel, spiking channel, bear trend, typically going to see profit taking at new lows. So we broke below a low here, went a little further, but starting to see profit taking. This bar, not that it's a major disappointment for the bears, but it is disappointing. The bears broke to a new low. They're hoping for a follow-through bar, and they don't get it. You have bears who, the unlucky bear that sold the low tick of yesterday, they're trapped. They're trapped into a losing short position, and who knows what they do. Maybe they sell the close of the bar, and they're hoping to avoid a loss by exiting at the midpoint, the average price of their two entries, the low of the bar, the close of the bar. So there's probably support at the midpoint of the bar and, of course, in the buy zone. The buy zone of a bar is the lower half. The sell zone of a bar is the upper half, and that's true for bear bars as well. And so here, this looks like a minor reversal, tight bear channel, probably sellers above yesterday's high, but also you have disappointed bears, so we may have to go higher to find sellers. We have a breakout point here that we may have to test, and there might be minor resistance there because we had a breakout and we went further. So probably resistance at this breakout point, support somewhere in this bar, and so I'm expecting a trading range day with resistance above and support below. Again, not a great stop order on the daily chart. Probably a minor reversal at best for the bulls. And then here, the 5-minute chart. We gapped up going into the day. And the gap up, you can think of the gap as a breakout, but generally I like to look at the Globex chart and see what I missed. Just so there's less bars. The big picture, I like to look at the 15-minute chart. Here's what we had going into the day. Let's find. There we are. So here's the Globex session. From this gap, that's the close of yesterday. And here's the overnight session. And it's a trading range. We went sideways. It's really tight through here. Bull breakout attempt, failed. Bear breakout attempt, failed. Bull breakout attempt, failed. And you can see it as an expanding triangle, 3 pushes up. And maybe from here or maybe from here, 2 or 3 legs down. The market is expanding, the range is getting bigger, but breakouts are failing. So just when it looks like it's about to break out, it reverses. Looks like it's getting strong, reverses. At one point, this bull bar was on its high, looks really strong, and then fails. So expecting a trading range day based on the daily, and then the Globex session further supports that suspicion. And so we have a gap up, but it's more of a trading range gap. So the gap might have a little less merit than if it was maybe a tight bull channel or some sort of stronger bull price action. But here we can think of this as the way I think of it is more of a buy vacuum. So we're breaking out. Breakout of what? Yesterday's high, this bull channel line. But we're breaking above a lot of bars to the left, and that's good for the bulls. But the follow-through bar 1, disappointing. The bulls don't get follow-through. We don't have a bull close on the bar. It is a buy reversal bar, closed above its midpoint, but it's weak. Probably sellers above the bar. but also probably buyers below after the gap up, pullback. And think of it as a spike, pullback. Maybe we're beginning to channel, so probably sellers at the high, but also buyers at the low. Bar 2, closing on its high, it's a bull bar, but overlapping bar 1 a lot. How much of bar 2 is actually breaking out? So the bulls still need follow through. And if you sold above bar 1, bar 2, not that disappointing. Bears probably are not panicking out of shorts, so there's not much contributing to the buying. The bears are not panicking and buying, and so there's not as much fuel as there could be to the upside. 3, doji. So I said the gap up, we have a spike, pullback on 1, and then we channeled up. In bar 3, the bars are getting smaller, getting lots of overlap. If we looked at a smaller time frame chart, I believe this would be sort of a spike and channel trend. And if that's true, I'm expecting sellers above 3, sellers above bars, and we may have to test the bar 1 low. The start of the channel often becomes the bottom of a trading range, and that's the market cycle. Spike, channel, trading range. So bar 3, even though it's a bull bar, it's a doji. So it's a trading range bar, 3 bars up, we're high in the range, and probably sellers above 3, maybe even sellers on the close of 3. 4, bear breakout bar. Big tail, you can see where we bounced the bar 1 low, so the bulls are hoping it's a double bottom. But this was a big enough breakout for a second leg down. If you bought below bar 3, your entry bar is disappointing, and it got bought back up to around your entry price. And if you bought below 3 and 4 is your entry bar, you probably were not holding a profitable position for the entire bar, and you were at a loss until it came back, and maybe here still at a smaller loss, but at a loss regardless. And you might be so disappointed in the entry bar that you just look to bail out of the trade, sell out of your long position, look to buy lower, maybe after a second leg down. So 4 might be a solid closed bar, breakout, pullback, probably get a second leg down, but also probably buyers below. We're above the moving average, we gapped up, we have 4 overlapping bars, so if we go to a new low, it's a trading range, probably buyers at the new low. 80% rule, most breakouts are going to fail. 5, big bear breakout bar. We're testing that channel line that we broke out of, so this may be support. It was resistance. Every time we touched it here, we found sellers, but then we broke above it. So those sellers got trapped, so now they're getting a chance to exit. If you sold, in theory, you sold here at the end of the day, you got trapped on the gap up, you're getting a chance to exit and avoid a loss, or with a much smaller loss. So probably support around the close of bar 5. It's 2 legs down, 1, pullback, 2, but strong enough down the entire 3-bar micro channel. Might need a second leg down, but because it's a trading range, we gapped up, it's big up, big down, big confusion. When that's the case, breakouts fail, traders fade breakouts and look to enter on deeper pullbacks to capture delayed second legs. So while 4 and 5 is strong enough for a second leg down, the gap up might be strong enough for a second leg up. Now we're getting a deep pullback. There's probably support, whether it's at yesterday's high or the channel line, the 60-minute EMA, 5-minute EMA. There's a cluster of support here. The gap up will probably get some sort of second leg, so probably support down here. But even if we bounce, like I said, this breakout will probably get a second leg too. So there's resistance above, support below. Traders fade breakouts. Here's a bear breakout attempt. Bulls will buy it, bears will take profits, scalp out of shorts, those who sold higher, selling low in the trading range. And like I said, looking to capture delayed second legs. So maybe breakout, leg 1, deep pullback, second leg up, and then here, leg 1, deep pullback, second leg down. When it's big up, big down, big confusion, both sides are expected to get second legs. You know you're in a trading range. 6, we have a trading range bar. It's a bear bar, but disappointing. If you sold the close of 5, 6 is your entry bar. It's really disappointing because you're selling into support, and the bar tested support but then bounced. And if you're selling what might be the low of a trading range, you really need momentum. You really don't want to see a pause, and you don't want to see hesitation. So 6 might be disappointing for the bears. And what it might be is a third leg down. Bar 4 sold off and then rallied. Bar 5 sold off. We rallied into the close, rallied on 6, sold off a third time. It's also much smaller than the prior 2 bars, or at least bar 5. So there might be more buyers down here. 7, reversal up. And enough of a reversal that there's probably buyers below 7, disappointed bears below, second leg up likely, plus the gap up. Getting a deep pullback, may get a second leg. This may be the start of it. 8, another bull bar, so maybe breakout, pullback, second leg. Maybe it's a spike and climax, bull trend on a smaller time frame, but look where we're testing, the bar 3 low. Bar 3 low is a breakout point, and bar 8 retested it. There's probably resistance there, because if you're a bull and you bought, and if you weren't quick to exit, you got trapped. And when the market retests your entry price, if you're a bull, you're probably relieved and you're just trying to exit the position at break even, or if you scaled in with a small win. But the point is, there's probably not urgency to buy up here at the top of the range where we had an open gap and bulls and bears got trapped. So traders want to sell here because the bulls who bought here, bulls buy below bar 3, trapped on 4, 5, and 6. They want to sell up here at break even at their original entry price. The bears want to sell because this may have been a little bit unusual. No great sell signal bar. Breakout bar had a big tail, but we still sold off a fair amount. This is enough of a move, enough of a breakout to the downside to expect a second leg because of the trapped and disappointed traders above. So the bears that missed the sell also want to sell, and they don't want to sell at the bottom of a trading range. They want to sell a deeper pullback, and they'll look to capture the delayed second leg. So probably resistance up here, but strong enough pair of bull bars, second leg up likely. 9 continued a little bit higher, but it's kind of like 4, 5, and 6. Bear bar with a tail, bear bar with a tail, and then a small trading range bar. Same thing here. Bull bar, tail above, bull bar, tail above, trading range bar. Spike and channel, top of the range, probably resistance up here. And then the bar getting even smaller. Bar 10, lower high, double top. Signal bar isn't great, but the context makes sense to sell. 3 pushes up, 8, 9, 10. Like I said, double top might be the top of the range. We're testing that resistance area. A little bit dangerous to buy below bar 10, even if you're expecting a second leg up. Better to look to buy in the buy zone down at the bottom of the range, maybe below bar 7 or 6. Maybe at least a 50% pullback, but not at the top. So bar 10, if you're long for any reason, you might exit below bar 10 because it's a second reversal down, and the rally wasn't strong. Lots of overlap, tails above bars, bars not closing above the prior bar's high. And now we're at the top of a trading range. You look to the left, we're still within the bear breakout. The bear breakout was bigger. Now we're getting a lower high. So 10 might be a stop order sell. Bulls exit, bears might enter. 11, bear breakout bar. Pretty good entry bar because look at the overlap with the prior bar. Bar 11 hardly overlaps bar 10. Because of that, traders got trapped, similar to bar 3 and 4. You buy below bar 10, you say maybe it's a 4 or 5 bar bull micro channel, second leg likely. Doji signal bar for the sell, so not the greatest sell signal bar. Maybe I'll buy below it, look to capture a second leg. And if you do that, you got trapped on bar 11. The bar closed well below your entry price, the low of the prior bar, and it traveled all the way down here during the bar, and that's disappointing. Even if you bought below bar 9 instead of bar 10, still a disappointing entry bar. Probably sellers above, second leg down likely, We also have this bear breakout, deep pullback, second leg still likely. So what did bar 12 do? 12 rallied up to that price. We tested the low of bar 10 where traders got trapped. And what happened? We found sellers. So if a trader bought here, trapped in to a losing position here, or trapped out, if you're a bear, you're trapped out of a winning position. If you're a bear, you're looking to sell. So we have bulls and bears both looking to sell above. That creates resistance in the sell zone of the bar. 12 rallies to that price and then sells off. 10, 11, 12, not the greatest or strongest bear breakout. Big tails below bars, tails above, lots of overlap. Middle of a tight trading range, really not ideal. You can see the market's getting squeezed. It's a triangle. At this point, we have lower highs, higher lows. The bears hoping for the breakout to get a second leg down, at least one tick below bar 6, but 13 is an even smaller bear bar. I'm not sure if it closed below the prior bar. Maybe it just did, but we could not close below the 5-minute chart 20 bar EMA. So we're still above the average price. Every bar closing above the average price, we gapped up. So there might be a little bit more of a bullish bias at this point, but it's a trading range. So the always in direction, not really clear to me. Big up, big down, big up, big down, big confusion. Trading range price action. So really not ideal for the always in mindset. As soon as it looks like it's always in short, maybe looks like it's strong enough to go lower, it reverses. Then it looks strong enough to go higher, reverses. And it just goes back and forth just like that. So what about bar 13? Do you sell? Now you're selling. If you sell here, you're in the buy zone of this bull breakout. There's probably support down here. You had bears selling the close of 6, selling for any reason down here, trapped on the rally. So when we pull back, there's probably support down here. Bulls looking to capture a delayed second leg after a deep pullback. Bears trapped into a losing position, hoping to avoid a loss or exit at break even. Tried to rally and then continued further on 14, but still not breaking below the bull breakout. So probably buyers below 7, buyers below 6. But this breakout, strong enough down for its own second leg. This is really disappointing for the rally, for the bulls. If you bought up here for any reason, thinking this rally, we're above the moving average, we gapped up, 4-bar micro channel, probably going to get a second leg. The sell-off down to 14 is really disappointing. And at this point, you might use any rally you can get to try to avoid a loss. 15, bull trend bar, good looking bar, but think about what I just said. If you bought up here, I'm trying to think how I want to demonstrate it. Let's see if we trigger the buy stop above bar 9. So if you're a bull and you bought above bar 9, you bought basically the worst price. Then you scaled in by buying one tick below, let's say bar 7, basically there. Then your average price is the midpoint of those two places, the bar 7 low and the high of 9. Here's your average price. And if a trader did that, 15 is giving them a brief, possibly giving them an opportunity to exit at break even on their entire trade. You buy here, scale in lower, and then there's a buy vacuum testing resistance. You have bulls who bought the high, scaling in lower, looking to avoid a loss. You have bears looking for a second leg down. It's about a 50% pullback of that sell-off. So good looking bull bar, but bad context. Also the bar 9 low getting retested again. If you bought here, trapped on the bear breakout, possibly a brief opportunity to exit at break even. And traders took it. They sold in the close of 15. We could not even get above bar 15 because nobody was willing to buy above bar 15. The price can only get to any price if there's an institutional bull and an institutional bear willing to enter there to take a trade there. You need a buyer and a seller. And basically retail traders like us are invisible. So, the market doesn't care about running your stop. If you bought somewhere up here, stop below 7, comes down, traps you out, only to reverse back up. It's never personal. The market doesn't even know you're there. The amount of money that we trade is so irrelevant to the amount of money the institutions trade. But the point with all that is if you set a buy stop order to go long above bar 15, the market doesn't trigger it. That tells you institutional traders were not willing to pay that price to buy above bar 15, because the price can only get there if an institution is willing to enter or to buy and sell at that price. Similarly, if you're a trader looking to sell, you're a bear, and you think, wow, what a great price to sell up here. Bar 9 high, what a great looking micro channel for a second leg. I'll set a limit order to go short up here. The only way you can short up here is if there's an institution willing to buy up here and willing to sell up here. So you can set a limit order here, but it doesn't necessarily mean it's going to get filled. So 16, 15, good looking bull bar, but bad context. Bull's hoping double bottom, or maybe some sort of 3 pushes, wedge, bull flag after the gap up, but couldn't even trigger the buy. And that, that's confusing. If something's wrong with the bull case, if you're looking to buy and the stop order doesn't trigger. And now 16 is a bear bar, closing on its low, probably getting a second leg down after 4 through 6 and after 10 through 14. And maybe it's leg 1, pullback, leg 2 subdividing into 1, pullback, 2. So probably buyers below 6. And that's the minimum target for the bears. It's a breakout mode open. Trading range open, pretty tight. The market is searching for a direction. 17, bear breakout attempt. Looks like we tested the low of bar 6 and found buyers below. So micro double bottom here, double bottom, you can call it a wedge, 1, 6, and 17. Bull reversal bar closing on its high, so maybe traders look to buy above bar 17 for a test of the top of the range, maybe even a measured move up based on the height of the opening range. But once again, the buy did not trigger. So again, there's something wrong with the bull case today. And what are we getting? We're getting lower highs, we're getting lower lows. So it looks like a trading range, but technically this is a bear channel. And the shape isn't great, but like I said, we're getting lower highs and lower lows. So 18. Now 18 might be a second leg trap. Leg 1, pull back. Leg 2, leg 1, pull back. Leg 2, leg 1, pull back. Leg 2. It's very nested. You can see the 2-legged pattern several different ways there. So the bears really need one more bar here. Because of that, some traders will buy the close of 18, betting that they won't get it. It's the bottom of a trading range, trying to break below yesterday's high. We failed once, failed maybe 2 more times. So the bulls betting the breakout below this high will fail. And also, like I said, nested 2-legged patterns, support. So traders might buy the close of 18, betting that the bears will not get it. And at this point, it's still not really clear whether it's always in long or always in short, at least to me. But then we got bar 19, and 19 is clarity. 18 and 19, now at the close of 19, to me, the market is always in short. Bear breakout crossing the moving average. 19 closed far below the bars to the left, at least the past 20 bars. Then you have, like I said, traders who bought the close of 18, betting this would not happen. Well, those traders are trapped. There are trapped traders who bought up here. Maybe they bought below bar 17, bought the close 18, betting this is the bottom of a trading range, and they were wrong. Price went a lot lower, so we have trapped traders above. Second leg down likely, strong enough bear breakout, at least 60% chance we're getting a second leg down. Most breakouts pull back, and so you can sell the close of 19, but if you do, probably have to use a wide stop and be willing to scale in. Bar 20, big, or I shouldn't say big, but bull trend bar. It's an inside bar, relatively small compared to 19, but disappointing. If you're a bear and you sold the close of 19, it's a really disappointing entry bar, so that might create some minor support at the close of 19. And it's enough, big down, big up. We'll probably go sideways for a few bars, but second leg down is still likely. This bar might need its own second leg up, but it's probably minor, and to me, not worth trading. You will have bulls buying in the buy zone of this bar, looking to scalp a second leg up, but to me, if it's always in short, then it's easier to trade in the direction of the higher probability, so I'd be looking to sell here. 21, retesting the close of 19 and bouncing, so there's disappointed bears buying back shorts here. Bulls see this breakout, buy in the buy zone of the bar, looking for a second leg up, continuing to go sideways, so there's two ways to look at it. Bear breakout and weak follow through, so disappointing for the bears, but also bear breakout reversal attempt, and it's pretty weak, disappointing for the bulls. So tight trading range, might be 50-50, but because of the price action so far today, it's a bear channel. We just got this breakout, always in short, probably sellers above, sellers at the breakout point, the 18 low, 17 low, the 6 low, yesterday's high, probably sellers above. 23, still overlapping, small bar within the tight trading range, attempting to break out but failing. Might be a second leg up for the bulls. 1, pull back. 2, still resistance above, second leg down likely, so probably more sellers above the bar. I think dangerous to be looking to buy here. And then 24, we rallied to a couple of different resistance areas. We had the 5-minute EMA, we had the breakout point, the bar 18 low. If you drew a channel line from the bar 19 low to the bar 22 low, you draw a parallel up here. It also tried to break out of that channel line, and that might be 2 or 3 legs up, maybe 1, 2, 3, or simply 1, pullback, 2. But it's a late leg at resistance at a breakout point. Also, it might be, maybe a 50% pullback of this bear leg. So lots of reasons to expect sellers here. And 24, bear bar closing on its low. It's a low 2 short after a bear breakout that's likely to get a second leg down. This might be the start of that second leg. And if there is going to be a second leg down, what's the target? Well, one target might be the measured move of the opening range. Breakout mode is a trading range. Bears hoping we get a breakout of the trading range, retest, and then measured move down. It's also possible we get a leg 2 measured move, maybe from 15 to 19, and then projected from the 24 high, takes us in the similar area. So there's magnets below. 25, small bull bar. Looks like we triggered the sell below 24, trying to reverse once again, but sellers in the sell zone of 24. Still looks like a minor reversal, bear breakout, sideways, and then probably get a second leg down. And that's what we got, 26, 27. This breakout strong enough for its own second leg, so the first reversal will probably be minor, and then we'll probably get another leg down, and that's what we got here, 30 and 31. And it's almost like a smaller version of this one. We had bear breakout and follow through, tight trading range, second leg down, bear breakout follow through, tight trading range, second leg down. At this point, it might be 2 or 3 legs down, depends on how you look at it, but there's a couple of ways to see a channel line. Maybe it's 1, 2, 3, or 1, 2, 3, leg 3 subdivided into 2. However you chop it up, it's probably a late leg, and we're at the cluster of support. So probably buyers down here, 31's a bar. I think it's reasonable to exit shorts above it. I think it's aggressive to buy above bar 31, but possible. Final flag, 28.29, tight trading range, one more bear breakout, and then we're far below the moving average, but we're getting consecutive sell climaxes with lots of trading range price action on the open. And again, these sell climaxes are uncharacteristic of bear trend days. So what it might end up being is more of a trading range day. This could all be a bear leg in a trading range, or it could be an upper trading range, bear breakout, and lower trading range. But either way, we'll probably bounce and get a couple of legs sideways to up. So reasonable to exit shorts above 31, okay to buy above 31. And then we got this bull breakout, and 4 consecutive bull bars. Disappointing if you're a bear. A little bit of an endless pullback. Probably buyers below for a second leg up, but probably sellers around bar 28, the 28 high, spike, pullback, and then climax. It's a spike and climax, but probably resistance here. But this is disappointing for the bears. So we try for trend resumption, but it's a disappointing bear bar. Maybe a little bit deeper than a 50% pullback. The bull's hoping, again, this is a final flag, and now at this point, maybe an expanding triangle as the bears get a second leg down, break out to a new low, couple of pushes up, couple of pushes down, the range is expanding, and then 38 bull bar closing on its high. It's a double bottom. It's a more reasonable buy to me than bar 31. So I think, again, reasonable for bears to exit above 38. Also reasonable for bulls to buy above 38 for a swing. We have magnets above, maybe this breakout point. We have spike, pullback, channel, the bar 24 high, which is basically the blue line, yesterday's high. So there's magnets above. And what's the probability on the close of bar 38 that we go? Would you rather sell the close of 38, stop here, target here, or would you rather buy 38, stop here, target here? To me, it looks like we're going at least a little bit higher, so not great to sell here. Good entry bar might be by the close 39. It might be a late leg, 1, 2, 3, but strong enough breakout, second leg likely, even if it pulls back first. And the context is pretty good for a swing up. Weak reversal attempt, we're getting continuation, bad low 1, buyers below, and now this entire rally, even though there's pullbacks and opposite bars, this entire rally is a breakout on a higher time frame. Second leg up likely. And really no stop order sell. If you bought above 38, where do you exit? No reason to exit yet. And it's a small pullback trend, really a bull breakout the entire way up. And where do you exit if you're long? We're so far from the moving average. Now we're high in probably a trading range. Big down, big up. 54 might be enough reason to exit longs, but to me, probably not enough reason to go short. It's kind of similar to 31. Okay to take profits on shorts, but aggressive to buy. Here, okay to take profits on longs, but aggressive to sell below 54. We formed a tight trading range. Possible final flag again at resistance at the top of this sell climax and we're failing to break above it. We failed once, twice, trying a third time and failing in a big way. Now 60 is a more reasonable stop order sell. Strong signal bar, really strong rejection, and strong reversal. So even though it's an outside bar, we tried to break out to the upside and we're failing in a big way, closing on its low. And now we have targets below, trapped traders. Let's see. There's a bunch of gaps open, big gap open here. Maybe the 45 high or the 44 high. The bottom of this bull breakout is a magnet. Think about the trader's equation. Bull breakout, but if you put your stop at the bottom of the bull leg, you're buying. There's 1 times your risk up here. And you can buy, but are you 60% certain we're going here before here, or that we're going here before we pull back, which would give you an opportunity to buy at a better price? To me, I'm not 60% sure, especially when we start to go sideways like this. You're buying momentum, and now we're going sideways. So bulls might start to reduce their position. Bears, they might start selling, especially when there's a bar like 60. And if there's a theoretical stop below 45, that's a target. Traders will sell here, stop up here, maybe a stop here, maybe even just halfway from here to here. Stop here, sell somewhere in here, target down here, make twice your risk. Continuing to go sideways, failing to break out to the upside. There might be a slightly higher probability we get the bull breakout because of the bull trend that preceded this tight trading range. But because we're high in the overall day's range, big down, big up, back to the top of the range, and this might be a final flag, there's danger, there's risks of buying up here, because you have to ask yourself, where's your stop and where's your target and what's the probability? And then we started to get consecutive bear bars, and then an EMA crossing bar, 65, probably sell the close, probably going at least a little bit lower, second leg down likely, got to that target in a hurry, and even further, but we're still within the range of this entire rally, and there's support. There's, let's see, a gap here, the bar 38 high. We're testing that on bar 67. There's probably going to be support down here. Strong enough breakout for a second leg, but it's sort of a big version of big up, big down. So at this point, traders are expecting a trading range. And if it's big up, big down, they're going to fade breakouts and look to capture delayed second legs. This rally should get a second leg after a deep pullback. This sell-off should get a second leg after a deep pullback. So this might be the deep pullback the traders buy, looking to capture the second leg up. And if they do get the second leg up, probably traders looking to sell up here to capture the second leg down. So if you're selling down here, again, it's the trader's equation. That's the problem. Or the problem is context and momentum. In theory, your stop's up here. If you're selling, you sell the close 67, or you sold the high tick, but you're holding short, it's the same trade. There's no such thing as other people's money. Your risk is the market price to your stop. So if you're selling here, stop here, entry here, there's 1 times your risk. And after this rally in the type of day, big down, big up, big down, we've had decent swings, but we're probably not going to break below this low, or at least not far below this low, and get a measured move down. So if you're selling here, you need momentum, and that's disappointing. And that might be reason enough for bears to exit their positions. We're far below the moving average, but testing support, and you're selling with big risk, and you're losing momentum. And that can cause a vacuum back to the upside. So low one short, but bad context. Bear trend, trend line break, might get a retest and a higher low, major trend reversal. And that's what we ended up getting here. And then another rally to the highs, but tight trading range up here. This tight trading range, it's an area of agreement. It's a magnet. Breakout attempt failed, but probably going to go sideways back in here. But now it's the end of the day. And then for me today, I took one trade. I said bars 18 and 19. I thought 19 made it clearly always in short. And the way that I'm trading, I'm reading the chart with an always in focus, and I'm trading with a breakout focus. I'm looking for breakouts and second legs. So I thought 18 and 19, at least 60% chance we're getting a second leg down. I'm looking for a stop order sell. I sell below bar 24, and I look for twice my risk. And the data might be a little bit different on TradeStation. I trade on Thinkorswim, but I know I exited the position during bar 31, and it looks like it doesn't quite reach it here. But yeah, I thought there were a couple of reasons, at least 2 or 3 reasons. There was the measured move of the opening range. There was the leg 2 measured move, and then twice the bar 24 signal bar, 2 times the range of that bar as well. So high probability and twice the risk on the trade. So I thought that was a pretty good trade, and it worked out. I mentioned in my other video the other day, yesterday, that I'm just setting my orders. So I'm just setting my stop order to go short, setting my stop above 24, and my target wherever the target may be, and then I'm just leaving it alone, detaching from the outcome. I can control my process, and I cannot control what the market does, so I'm just letting that go. And so basically I'm not managing trades this week. It's just been I decided to challenge myself to practice my discipline, to just set my orders and let it go. So that's what I'm doing it for, at least this week. It gives me more opportunity to think about how I'd like to manage the trade without actually having to do anything on the fly and kind of just guessing. It's helping me structure my thinking and organize my thinking. But that's it for me, and thanks everybody for watching, and I hope everyone has a good night.